Hey everyone, Josh Martinez here, and welcome to this week's idea. This week's idea will be on silver futures. Worked out great the last two times, so we're going to keep rolling with it. On the 1 hour time frame, we do have an up Fibonacci sequence. We have less than a 236 retracement, making the extension the 1.618. So the target price will be 121.165, which is about 1,991 ticks above the market. Best place to put our stop will always be below the 1 boundary. So we have our stop at 89.245, and where you enter in is preference. Right now, the risk is larger than the reward. However, silver is on a tear, and we're going up and up and up. You can always go to like a 5-minute time frame, look for the latest uptrend, apply your favorite entry strategy, try to find less risk. But in regarding to the Fibonacci's, this is the best place, and that is the best limit in regards to giving us the best chance to win the trade when using the Fibonacci sequence. Now, what we're going to do is we're going to apply the up Fibonacci, so this way you can see how we came to this conclusion. So starting from the most recent bullish trend from January 8th, 2026, and we use our one-click fibs, 3, 2, 1 click, we can see that we have 1, 2, 3, 4, 5, 6, 7 Fibonacci's that already worked. So this has already worked 7 times in a row, which is great. And this is number 8, okay? And so the reward with the 1,900 plus ticks, give or take, when trading a full contract is $25 a tick. Massive, massive risk, but the reward is still $46,700 US from where we currently are right now. So best thing to do is go to a smaller time frame. Let me show you how to do that. We'll go to like a 5-minute time frame, and we'll go to what all I really want to do is extract the end goal in mind, which is going to be the target. We'll bring up a silver SI futures. We'll go to the 5-minute time frame, and we'll just apply the uptrend and just keep on focusing on going long with minimizing risk. See, one of the things I really love to do is I like to take the larger time frame targets, which, larger time frames control the direction of the smaller time frames, not the other way around. And that, for me, that gives me such an edge on the market, right? So if I kind of understand what the market may do in a larger time frame, it gives me more confidence on what to do on a smaller time frame. So on a 5-minute time frame, we can see that we're in an uptrend. The market is making higher highs and higher lows. 1, 2, 3, 4, 5 times the market has came near the bottom blue level. If I copy that angle, bring it up towards the top, you can see that's resistance as well. So like the structure and the trade plan is kind of developing itself, right? So to minimize risk, you could A, wait for the market to come to the bottom blue level and then try to B, buy it back up to the top level. That's not guaranteed. So using like a counter trend line break is what I like a lot to increase odds. A counter trend line break is exactly the way it sounds. It's a trend line that counters the direction you think the market's going to go. So if you think the market's going to go up, when or if the market's going down, you bring in a purple line that monitors that short-term downward movement. When or if the market closes above it, that's where you buy. You buy when the buyers take over. Instead of guessing the U-turn, you trade the U-turn. And usually what ends up happening, not always, but usually when you buy the market, it goes your way right away, promoting a very fun experience. Option 2 is the market breaks and closes above the resistance level. When or if it does that, just wait for the next low price and then bring in the counter trend line and try to buy the market up. And then for stop placements, because it's very, very important, yes, of course, you can use Fibonacci's on a 5-minute time frame. However, if you just place your stop below the previous low, so if we get this entry and you place your stop below that low, you can shave off a lot of risk. And this way you're buying higher than the previous low, which is good, and you have your stop out of the way of the wave. If the market does break above and then gives us a low above the channel, you can always place your stop below this current low right here. And this way, for if you are to get stopped out, it would require the market to break structure and make a lower low. And really, if that's the case, you got to get out of the market anyway. So that is a way. So this week's idea will be silver futures, right? Keep on keeping on, focusing on the market going long, which is fantastic. And that ends this. All right, everyone, just understand there is risk involved when it comes to trading. You should never invest money you cannot afford to lose. Always keep risk management in mind. Understand that we are not CTAs, which stands for Commodity Trading Advisors. What that means, what we're going to share with you is research. What you do with this information is completely up to you. Past performance is not indicative of future results. What that means is anything can happen. There are no guarantees, no 100%, no absolutes, and so trade wisely. All right, everyone, my name is Josh Martinez, and we'll see you next time.